Hi everybody, my name is Cody Gronkiewicz. I, among many things, am an insurance broker, and I wanted to start this off by saying Happy New Year. Going into 2023 here, the new year means something a little bit different to everybody, different kinds of goals, different mindsets. For me, I'm using it as an excuse to finally get this podcast off the ground. I've been putting it off for a couple weeks, if not months now. I really don't have an excuse to not to, so we're going to get this started. I've never done a podcast before. I don't even know at this point what I'm going to call this podcast, but the goal is going to be to make this an informational, kind of 15-minute podcast where we go over some common questions of the industry. Later on down the line, I'd like to get into different things like the mortgage industry, different types of loans and financing, the real estate industry, personal finances. But for the time being, we're just going to start focusing with the insurance side of things. A couple months ago, I put out a couple of social media posts to kind of fish for different things people would like to hear about the industry, about the market. And I got some good material to go off of here. So we're going to start real basic, talking about some of the specifics of insurance. Mostly just what is it? How do you use it? It's surprising to me. This is the stuff they really don't teach in schools anymore, that, you're exposed to it every day. It's something that you need, and most people don't know anything about it. So we're just going to start real basic here and work our way into this. So stick around. So what exactly is insurance then? It's a really basic question that has a surprising depth to it. So I'm going to try and keep this really simple and in layman's terms. Essentially, what insurance acts as is a financial pool of multiple contributors, so that if something were to happen to those contributors, that the financial impact is mitigated. Say that there is a homeowners insurance pool, many people are contributing into it. One of the contributors' houses burns down. They then have access to the financial pool up to the coverage that they have for replacing their home, the personal property, their expense to live and eat elsewhere while their home is being repaired. All of that is being considered on their policies, how much they're paying into the pool, and how much risk they bring to the pool when they do so. So that is the bare minimum basic of what insurance looks like from the top down. Now, where it starts to get a little bit more complicated is when you start considering what are different people's risk in the pool. How much coverage are they needing more so than other people? What kind of position is the private company in to pay out on, say, mass amounts of claims in a very small time frame? Or how much market share are they trying to capture of different customers? Is their risk pool too great right now that they need to start going through a regression period and either start raising rates or reassessing the customers that they currently have? It's very complicated and very fluid, something that can change very quickly. And that's why I like to be in the position I'm in as a broker, where I can kind of see the market from a top-down viewpoint. But it is very surprising how quickly the entire industry complicates itself in different areas. Now, with saying all of that, I've already gotten really far ahead of myself in the specifics of insurance. But what I'm going to do to make this more relevant is break down the two most common forms of insurance that most people see on a daily basis. We're going to break down a little bit what homeowners insurance looks like and what auto insurance looks like, the coverages that are typically included, and things to look out for in the industry. So starting off, I'm going to talk about homeowners insurance. I'm going to try and make this really simple and start just from the top down of the coverages built into your homeowners insurance policy. Your dwelling coverage is going to be what covers for the structure of the home, and this is typically written for the estimated replacement cost of the home, so that if the home were to be destroyed by a covered peril, you'll have enough to replace it with new materials and with all the labor and such involved in rebuilding a home. Your coverage B is going to be your detached structures, covering things like detached garages, sheds, and pools. This is typically written at 10% of the value of the home. Your coverage C is going to be your personal property coverage for loose contents in the home. Say if you were to remove the roof of the home, turn it upside down and shake it out. This will be what covers for essentially what falls out of the home at that point, including furniture, electronics, clothing. This will standard be written at 50% of your dwelling. Your coverage D is going to be your loss of use coverage, which covers for you to stay out and eat out as a result of a claim, including amenities and such like that, so you can maintain regular living while your home is being repaired, replaced, so that it's livable again. Your coverage E, your medical payments, are going to be for quick medical payouts if needed be, so that you have that as a cushion of protection before you need to start worrying about making it a full liability claim. Your coverage F, your personal liability, is a big one in my opinion. And as a diligent insurance agent, I will always recommend maximizing your personal liability. This will be what covers for damages to other people or property that you are found liable for within the terms of your policy. This includes lawyer fees, legal litigation fees, and whatever you're found liable for as you're being sued by the other person for the damages. This is a big one. I'm always going to recommend maximizing that coverage when you can for what makes sense for you. Otherwise, you have your deductibles. This would be what you are responsible for paying when you file a claim by a covered peril. Market industry average is going to be a $1,000 deductible. So say if you lose your roof, you have it covered for replacement cost, and it's a $20,000 roof replacement. You're only out of pocket that $1,000, and the insurance is going to take care of the rest for that. Of course, there are a lot of additional coverages, options, and endorsements that you can add on to most homeowners insurance policies. I'm going to leave it at that for now for time's sake. This will be something that I would love to revisit in the future as all the different types of endorsements and what they mean. But we're going to move on to auto insurance now and what exactly a basic policy with that looks like. So moving on to auto insurance now. We're going to do this in the same format. We're just kind of going to go down the coverage list from top to bottom here of common coverages built into an auto insurance policy. Starting with bodily injury liability, this is what covers for bodily harm you do to another person that you are found liable for. This would be typically seen as two limits. So you would have X amount of dollars per person up to X amount of dollars per claim. Next on the list, you're going to see property damage liability. This will be a single limit coverage where if you are found liable for the damages of another person's property, that's the coverage that'll cover for that. Your and underinsured coverages for bodily injury will be what covers you, yourself, and your passengers as a result of somebody doing bodily harm, being liable for bodily harm to you that either does not have insurance or not enough insurance to cover for those damages. You'll have that coverage for yourself on your own policy. Your uninsured motorist property damage acts in a very similar way, so that if somebody were to damage your vehicle, your personal property, and does not have insurance, that you have that coverage from your own company to cover for that. Next down the list, you're going to have medical payments. Very similar to the homeowners insurance medical payments, this will be a quick medical payout to you or anybody in the vehicle as a result of an accident, whether you use it for ambulance rides or to meet a health insurance deductible. And this is typically written regardless of fault of an incident. So this is a nice coverage to have built into your policy. Next on the list, you're going to have, let's do comprehensive coverage. Your comprehensive coverage is typically covering your vehicle for things that aren't necessarily your fault, things like fire, theft, vandalism, a collision with an animal, falling objects, things along those sorts. And this is one of the coverages that default comes with a deductible. Some companies offer a $0 deductible, but not all of them. Market average, you're going to see between a $500 and $1,000 deductible. This, again, will be what you're responsible for paying as a result of using the insurance for this covered peril. Your collision deductible your collision coverage is going to be used to cover your own vehicle, typically for things like at-fault accidents or single car accidents where, say, you roll a vehicle or run into a telephone post and you need repairs on your vehicle. You're going to use that collision coverage if you have it on your vehicle minus the deductible. So you'll be out of pocket for whatever your deductible is. And again, same thing. Market average for that goes for around $500 or $1,000 depending on where you assess your risk there. You'll also typically have the option for endorsements of emergency roadside or rental coverage as well, so that you'll have coverage to put yourself in a rental vehicle while yours is in the shop as a result of a claim. Not written standard on all policies, but is a very common coverage with most insurance companies. So that really gives us the rundown of the basics of insurance and what your most common policies are really going to look like. Unfortunately, after that, it's going to start getting really, really complicated really fast when you start considering the different options per coverage, per company, per what the insurance agent is going to recommend, and per your specific needs as you're considering different insurance options. That's why, quite frankly, people like myself are in a job to help make that more digestible, to help make educated decisions. And this is all stuff I would love to get into at a later time, but this is really my starting point as I'm really just starting the podcast as a whole. I'm hoping that this isn't too information dense or monotonous, that it's not digestible or listenable, I suppose. But I am more than happy to review any sort of specific information. I'm going to be posting this on several different platforms, and I'm really going to be open to any sort of questions people may have or critiques on how to make any of this information more digestible. If you have any suggestion whatsoever, please reach out, let me know, because like I said, I'm going in blind to this. I don't know what I'm doing. I am a much better insurance agent than I am talk show host, so please, I am open to suggestion. So looking forward on this now, I'm going to really love getting a little bit further into this, taking a little bit more creative freedom and getting into specifics about the insurance industry and the way I see it. Later on down the line, like I said, I'm going to be looking into having some guests to talk about things like mortgages, lending, real estate, personal finance, things along those lines, so that we can really pull this all together and essentially fill in the gaps of everything they don't teach you in school anymore. I can't tell you how disappointed I was when I was reading through my licensing textbook for insurance and realized just how big of a gap my education had left me in that specific area. And it's something that everybody needs and nobody knows anything about. So like I said, we're going to make this an informational piece. I'm really excited to do it, and I'm open to suggestions. So please leave your honest feedback, and I'll look forward to seeing you in the next episode of whatever I end up calling this podcast. Thank you.